Facebook, etc. Those are things that are dependent on the international economy, our world economy. It's back to the old maxim of Karl Marx that the capitalists are always in search of markets. There's no doubt about that. That's basic economics 101. And when you saturate the U.S. Market for, say, Facebook, Twitter, any of these social things, you have to then go to a globalized economy. And now with even the automobile manufacturers, the Japanese manufacturers that manufacture in the U.S., that is all also based on where the yen is or the yen is not. So thus those things, they are dependent. And also on the European economy, corporations have, depending on which corporation we're talking about, do 30 to 40%, many of the large corporations, IBM, etc., in Europe alone. So in other words, they cannot be just dependent on this economy. And we speak of China and other economies there. So it's as the years go by, quote unquote, from the 70s to the 80s, it is becoming a different type of economy. And also in the 70s and in the 80s and in the 90s, we did not have the sequester or austerity. Now, President Carter talked about austerity, but it was a different austerity. It was not an austerity mandated by Congress to tame a so-called deficit. And this is where the U.S. economy does get into trouble. Let me try to finish this up here. Back to Reuters here. A weak U.S. economic data at the start of the year from retail sales to business spending. We went over that and pushed back to September their expectations for first rate hike since 2006. Well, that is based upon a number of things. The euro passed the $1.10 mark, having dropped below $1.05 there. Well, that's nothing for the euro. The euro has had its problems. Finch cut the Greek credit status on Friday due to uncertainty over the timing of the release of aid there. The Greek zone is, as a whole, the main data point will be the March flash inflation due on Tuesday. A lot of data will be coming out this week, incidentally. Indeed, with low oil prices and a weak euro driving consumption exports, there are some real questions on whether the European Central Bank will need the full $1 trillion euro bond buying program. That would be equal to what? $1.09 trillion. Well, they will need it. And this is one of the problems here, that a lot of these forecasts are based upon quote-unquote normal times, of what the models say are normal times. And these are very abnormal times. Therefore, the models have to be adjusted. And he goes on to quote somebody by the name of Rob Cornell. If not only the Eurozone actively firming up, but inflation, you have to ask if the EBU will continue until, 2016 anyway. Finally, the health of the Chinese economy should become clear after the National Bureau of Statistics in China will also be reporting, and the final HBS Market Purchases Index on Wednesday. So we'll have a lot of things here. The HBSB market, we have their PMIs out, and that'll be for March, and we'll see where they are going. And this is the world's second largest economy, with likely fuel calls for more easing of monetary policy. Well, we'll see. Let's move now to the BBC. We already covered the Japanese deflation situation there, and that continues to move on. I'll go to Brazil here. Part of the rising economic world structure here, Brasilia. The economy has been growing at a fast pace, and it's the headline here, narrowly avoided contrasting in 2014 with 0.1% there, a slowdown as a result. Low commodity prices, sluggish global growth, and low investor confidence. There, new Joaquin Levy, he's the new financial minister, has the country has moved to from stimulus to austerity. A very, very bad situation there for 2011. Until last year, Brazil's government was trying to stimulate the economy by offering labor tax breaks, subsidizing petrol, and lowering the price of electricity. This levy has reeled in government spending, raised taxes in order to balance government finances, and as a result, analysts predict 2015 is likely to be a difficult year. No doubt about that. Austerity is always a difficult way to go, and in most cases, austerity is a way we do not want to go. Those price things can be a very misunderstood situation. There is what happened in the U.S. They harm growth more than they help growth, and that is out of the old book of economics in 1920. Very unfortunate situation there. And the balance of payments is also a very difficult situation. So in other words, it tends to be a win, a lose, a no-win situation, I should say, with many operators. Best Buy evidently is coming on to the same problem as a retailer in the U.S. as another retailer, Target. They are closing businesses in Canada. It closes Canada's Future Shops. The U.S. consumer chain Best Buy has announced it's closing its Canadian subsidiary, Future Shops, and converting 65 at 131 stores into Best Buy outlets. As a result, 500 full-time workers and 1,000 part-time workers will be made redundant. Future Shops, Canada's biggest electronics brand, has been owned by Best Buy since 2001. Best Buy said it will be investing 200 million Canadian dollars. That's 106.5 million pounds, and 158 million U.S. dollars in the operation in Canada. Analysts say the move will rationalize Best Buy's offering in Canada and get rid of duplication. Many of these financial entities are just not managed very well. We'll go now to the market data. I believe these will be Friday unless otherwise noted. And they are indeed. On Monday, the BBC Global 30 is up 7.60. The FTSE on Friday was down 40.31. In Amsterdam, they were also down 0.64. The DAC in Germany was actually at 24.65. In Paris, they were at 27.71. In Brussels, 9.68. They were down in Madrid at 26.40. In Zurich, 1.01. In Moscow, on Friday also, they were down 10.29. In Johannesburg, down also to 94.82. 2. In Bombay, today, Monday, 245.20. In Karachi, down 811.37. In Lahore also they were down on Friday, 68.71 in the minors, and minus 49.31. And in Tehran on Sunday, 740.50. In Sydney on Monday, 72.60, and in Nikkei at 120.99 on Monday, and in the Hang Seng in Hong Kong, good day for them, 440.09. In Shanghai, 9 there. And the Dow on Friday at 34.43. The Nasdaq, tech laden, 27.86. And the Merck, the commodities market out in the Midwest city of Chicago, at 4.87. And in Sao Paulo, they were down on Friday, 485.19. And in Mexico on Friday, 408.81. We'll go now to the commodities. Basically, for petroleum, petroproduct, Brent crude. Here we go. Brent crude on Friday was down $2.99 at 56.20. The spot was down 28 cents at $57.87. West Texas Intermediate was down $2.85 at $48.58. T-Boone Pickens still jumping for joy. He remembers $15 a barrel oil to go. The Forex was down $11.40 at $1,198. Dubai Go, $1,200, down $3.70 there. And we'll spot with some of the little commodities here. The cocoa down $19. And coffee futures down $28. White sugar futures down $3.21. Well, no tooth decay there. So this will do it for us. For those in business, make it a productive week. For the consumer, keep your eye on the ball. Prices will probably favor you, as there is a glut in many things on particularly the U.S. market, as in Japan. They need to stimulate growth there also. We'll talk to you on our next production, the scheduled production, which will be next week. Good day.